Welcome back to the TCS Top Brass. We now have with us the head of HR and the CFO. We have Samir Seksaria and Milind Lakkad with us. Thank you very much, gentlemen. Milind, it has to be an HR question because of this huge 6,300 numbers that your workforce shrunk by. Now, I mean, you shrink the workforce only when you don't see enough work. So can we conclude that Q3 and Q4 perhaps are going to be as tough as Q2?
From a workforce standpoint?
Yeah, otherwise you would have more people, isn't it?
I think I expect, if not to that level, but similar numbers in the coming quarter.
Similar numbers on the headcount reduction?
Yeah, headcount reduction.
Oh, you will reduce 6,000 in the
I will not
current
say I will not be able to commit to a number, but yeah, we are in making all the investment which we made in the past is now getting eventually we getting fruits out of it, and as a result we are attrition also is coming down, and as a result we are recalibrating our hiring. So our hiring numbers are going to be less compared to our attrition, and as a result I see the number will be lower significantly. If it is a low positive or a negative number is very difficult to say at this point.
Is it because they're more productive, they're better trained?
Because we have trained them for 18 months, 18 to 24 months. They have gone on the jobs, and now they have come on stream and now delivering. So that actually is a significant investment which we made is now paying off.
So is that a margin lever then, Samir? We should, because of that, is that one reason why you should expect better margins in Q3 and Q4?
So absolutely it's a margin lever, and that's what has been delivered in Q2. So if you look at the key, what we call as disciplined execution, or what we got 100 basis points specifically from driving productivity and utilization. And also we being able to replace or further optimize on the subcontractor cost.
Samir, is 25% exit margin for this year a tall task, considering that you will have large deal transition, which initially do put pressure on margin, and plus there are fewer working days? So is 25% a tall task according to you?
So I think first we'll be happy with what we were able to deliver in Q2, with top line being slightly sluggish, being able to deliver 110 basis points, and keeping in mind that we have given full cycle increments for the year. I think, and the levers which I talked about, if we are able to continue, and they do provide further scope for optimization, that would be what we'll be relying upon as a positive. As you rightly called out, there would be headwinds which we have to take it into our straddle when we are working on the overall.
So 25% doable?
Let's hope.
How much of a headwind are these large deals on your margins?
So, like I yesterday also spoke to you, we look at it from a portfolio perspective.
No, just in the near term.
See, overall, our objective would be, as a portfolio, to deliver the margins which we are looking towards.
There is a belief among analysts that in these large deals, since they are so severely competed for, they tend to be of lower margins. Is that a fair assumption?
So as I mentioned yesterday as well, we'll take strategic calls at a specific account level. But overall, our focus would be to stay focused on the portfolio delivering the margin. Yes, it could be in some things, and that's our strategic call which we would be taking. Also, the deal life cycle or the project life cycle also could have various varying levels of margins.
So directionally, margins improve in Q3, Q4 versus Q2?
With your best wishes.
Milind, getting back to that point about recalibrating your hiring, you had put out at the beginning of the year that you will hire 40,000 freshers. Does that target stay?
So I think the point is we have made offers, and we are not obviously we are going to honor all the offers, right? And the point is when do they come in, which quarter they come in is something which gets calibrated. So that is how what the plan is. In the past we also hired during the year, that also has happened. So we'll do all kinds of things, to ensure that we are aligned with what is required from a business perspective and what is required from a long-term standpoint.
are training costs going up, Milind, because you'll have to respond to generative AI, new technologies, new challenges?
I think our investment in overall talent development is very, very high. It is a significant.
Does it get higher is what I'm asking.
No, but it is so high that this is not material enough to basically make a significant impact.
Okay. So, Samir, therefore, what will you look for as margins? You clearly told us that one lever is the fact that you're able to do more work with less people. What are the other margins, other levers?
So first, let me tell you, the differentiated margins which we have, or the industry-leading margins, are a result of the investments which we make early on in the life cycle. And I think, as I said, the current levers which so productivity, utilization, and if growth continues as it is, then further looking at subcontractor cost would be the key levers. And if I look at it, if growth accelerates, it will only help us accelerate this journey also.
Milind, it's very rare that TCS delays even the onboarding of freshers. It's not happened to TCS in a very, very long time. Isn't that?
There are situations which we need to adapt to, and while I'll tell you one thing, even though we have delayed a bit, we have constantly engaged with the freshers and ensuring that they are not just engaging with us, but also learning along the way, and so there is a situation where we don't feel that, that the aspect of them delaying joining us is, letting the engagement coming down. Engagement is continuously on, and this is just a couple of months here and there, so I think we should be okay.
Samir, finally, I wanted to ask you, are there green shoots in terms of areas? See, BFSI clearly, year-on-year terms, is 0.5% down. Likewise, you're down even in, some other verticals. But you're doing well in, obviously, Middle East, you're doing well in energy. What are the green shoots where you think you can compensate for the difficult period that BFSI is going through?
So if you look at, I'll not base it on one quarter, but definitely in Q2, if you look at BFSI has delivered positive growth sequentially, versus we know the pain which has been through the many quarters, specifically in BFSI and North America. Similarly on Europe, sequentially it has been a little better. But I think the most impacted verticals have been BFSI, the telcos on CMI, and tech and services, and a little bit now coming in on the retail side, versus manufacturing, as well as on energy and utilities, which we have carved out now, have been outperformers at double digit. From a geography perspective, the emerging markets have outperformed, and UK continues to be better.
Okay, but will they be good enough to counter, to some extent, what you are losing in BFSI?
That's what we have to monitor and balance it off. That's the equation we have to play.
Milind, does attrition get lower from current levels of 14.9%?
I expect it to come down further to our industry benchmark levels, which we are used to, in the 11 to 14% range.
11 to 14%. And this could happen as early as?
As early as next quarter. Yes.
Okay, and for the end of the year, are we actually seeing a single-digit attrition number?
Hard to say. Hard to say. But I think we are okay with 11 to 14% range, and we expect to maintain that.
Okay. Samir, would you say TCS has gotten a bit more aggressive on cost cutting this time? Because despite no growth on your top line, you managed to deliver a very strong margin expansion. I know your peers have embarked on a cost optimization, cost cutting, call it what you want. But is TCS also looking at that?
See, if you look at my commentary with y'all in last quarter, I called out on the discretionary expenses that they have achieved critical mass. And these are something which we were able to deliver significantly. We have called out on the productivity utilization also consistently that we have opportunities to optimize. While we have, if you look at some of the expenses on the direct revenue side, the cost of revenue side, those have continued to increase, and we have invested where it is required. You see infrastructure expenses going up. So,
just a final question from me. We always keep telling you this. Accenture has announced this $200 million generative AI orders. When do we hear the first one from TCS?
see, we have been investing enough. We have had 250 projects which are the pipeline which is available, and we are incrementally working with customers in terms of their pilots, co-innovating with them, and also working with them on their Gen AI strategy and roadmap.
So you may stun us this quarter itself.
Let's see, let's wait.
Right.
Milind, just one more question. You all organized restructuring. There was a change in the way you all structure the organization. It's now decided on geographies, verticals, a bit of a departure from what we've seen in the past few years. What is the change that you expect it should bring about to TCS, the benefit of this organizational restructuring?
It is more aligned to the customer situations. The customers also like it. And we bring in the overall industry point of view, and at one place. All of that is so important, and that will basically only bring us to our customers closer.
Okay. All the very best for the third and the fourth quarters, and thank you very much for participating in this chat.
Thank you, Latha. Thank you, Reema.
Back to you guys in the studio.